Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore today, the 5th of August. A few things to talk about. I think one of the big news that, or rather big topics that have hit the overnight wires is Apple. Apple last night saw a continuation of that decline, making this decline one of the bigger so-called declines that we have seen the stock come through. It's essentially in a state of correction at this point in time. Now, what makes this move actually quite significant in terms of catching interest in the market was the fact that at these sort of levels, the stock has actually broken through or below its 200-day moving average, and typically this would, to some degree, signify that the stock is actually reversing its trend, its upward trend for that matter, which has been very well maintained for a good part of the last 2-3 years or so. Now, we have argued here before that Apple, while it is a great company, good products and all, and still growing their business in a nice way, it's growing at a pace not up to market expectations, and as a result of that, we have seen the stock actually pull back on the back of some of their earnings, which has been good, although they've flagged going forward more challenging times ahead. The other thing about Apple is that it is definitely an over-owned stock. Out of over 54 analysts that has covered the company in New York, almost 52 of them have either a buy or a hold on this stock, with nobody calling a sell. As a result of that, we are seeing an overexposure in the company, and that vulnerability of that overexposure position could set these things or this stock down perhaps a little bit more significant on the downside in the days to come. It's going to be interesting to see whether we consolidate here or we try to break back above this 119, 120 level back into the zone that has been comfortable for the stock for the last little while or so, or not. If it doesn't, or if it fails to challenge and break through its 200-day moving average on the way up again, we may see a bigger slide down. But even if you look at Apple's stock, at least for the next the last 3 years, well, this is a weekly chart. The last time we saw this big decline of the stock, where the stock essentially moved from 100 level to down to 60 level, or essentially almost close to a 30-40% slide. We could see this perhaps play out once more, purely because of the high weightage of this stock or rather the exposure of fund managers into this stock. Now, this stock is not just significant in the sense that it is one of the most pervasive, or it sells one of the most pervasive products across the world, but it's also a huge heavy weight on the market itself, not in terms of indices, not just on the Nasdaq, but also in things like the S&P. And I think this is where the worry is, whether this pullback may have a more significant impact on the pullback of some of the other major indices. This chart is something that most of you guys are familiar with, so I just want to remind everybody that we are probably sitting in a state where we could see downsides being tested once more. But obviously it's good to see, if it breaks convincingly this line on the downside, or if it reverses on the upside, then these sort of levels down here, the red lines, 2136, 2119 or 2120 for example, may have to be tested and broken through again. Over in Singapore on stocks per se, we are seeing an early open down here. Last night, Capital Corp was something that I signaled. There's a hammer down here. It'd be interesting to see whether this small little gap down here will close, which closes. If that were to happen, we're going to see the stock maybe close that gap up to around the 741 sort of level. If so, we may see this thing extend, and maybe this gap being more or less closed or maybe addressed. But essentially, this stock, although we still don't like it fundamentally because of the exposure into the rig business, I think we are seeing this drop down here quite significant, and as a result of that, we may see some bit of a pullback, perhaps to the 780 level or so. But essentially that down channel, which highlights the plight of the company and the business that they are in, as in oil rig business, maintains to be quite a tough environment looking forward for this company. Besides that, I think it's still early days. Singapore, will trade tomorrow, last day before it goes on a long break. So we will probably see some sort of a perhaps covering of positions that have mainly been in the downside. But this early morning, we are seeing things being hit again. The Singapore Free Index is down 75 basis point, or almost 75 of 1%. And if we were to look at some of the early movers, Genting takes the spotlight with unflattering numbers and business toll. Essentially, I think they are seeing pressures come in to their business where currency is concerned. This was what was originally flagged very early on. I may have not had a chance to go through yet, but it's something that is certainly taking the limelight in the early trade this morning. On the upside, Sembcorp Industries up 13 cents down here on the back of stronger than expected results. They beat the expectations and they came in positively on the back of some of, accounting for a sale of a water treatment plant and booking that profits in. But certainly the market likes this. Again, I suspect that this could be a little bit of a rebound, technical if they may, in view of the fact that most of these stocks were hammered quite hard the last week and a half or so. Anyway, thank you.